Every year in the month of March, the dividend growth ETF SCHD goes through what is known as Reconstitution, and that is basically a way of saying that the fund basically removes some of the holdings that they feel no longer align with the fund's goals and replaces them with new holdings. Now, SCHD is a major holding for a lot of dividend growth investors, including myself, as it currently makes up around 49% of my entire portfolio. So in this video, we need to take a deep dive into this SCHD Reconstitution. We'll be looking at all the new additions and all the removals, looking at the top 15 holdings, and looking at some major notes that we really need to break down for this fund. And if you'd like to get the SCHD Reconstitution spreadsheet completely for free, I'll be sending it out for free Friday via my newsletter, which you can sign up for at my link in the description. So let's go ahead and start this breakdown. Now, historically speaking, SCHD has performed very well. If we look at the past 10 years, purely from a price perspective, they're up around 116%, but we also need to keep in mind much of their total returns does come in the form of dividends. So yes, while their price return was around 114% over the past decade, including dividends, the total return came in at around 192%. But here's what's really impressive about the fund. The fund has a very solid starting dividend yield, sitting at about 3.38%, and historically speaking, on average, it's been closer to around 3.5 to 3.6%. But despite that high starting dividend yield, the dividend growth from this company has been absolutely phenomenal. Look at the 3, 5, and 10-year dividend growth rates for this fund. The 3-year comes in at around 9.5%, the 5-year at 13%, and the 10-year dividend CAGR at 11.4%. So this fund has seen phenomenal dividend growth over the past decade. Now, before you ever invest in any fund, you need to understand the fund's objective. And in the case of SCHD, the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, one of the keys for a lot of funds is before fees and expenses, but in the case of SCHD, they have a very low expense ratio sitting at 0.06%. So essentially that means for every $10,000 invested, you only pay $6 in fees, which is a pretty nice low expense ratio. Now here on the highlights tab, we can see this fund invests in stocks selected for fundamental strength relative to their peers based on financial ratios. Now, what exactly does that mean? Now, essentially, SCHD uses an algorithm based on 4 different screens to decide what the holdings in the portfolio should look like. And the 4 metrics that algorithm looks at are free cash flow to total debt, that's one I really like, return on equity, indicated dividend yield, and 5-year dividend growth. So it's clear this fund is focused on companies with sustainable, solid dividend growth, but also have a decent starting dividend yield. And of course, all those metrics have to be backed by solid free cash flow. So let's go ahead and jump into my spreadsheet and look at all the additions and removals and some key notes from SCHD's recent reconstitution. Again, I'll be sending out this spreadsheet for free via my newsletter at the link in the description on Friday. Now, it is worth noting for some of these metrics to be automatically pulled into my spreadsheet, I am using the ticker data function and the ticker data extension in Google Sheets, which you can download at my link in the description as well. But starting from the top, we can see there were 23 new additions to SCHD, and if we look at the removals, and 23 removals as well. So let's go ahead and go through some of these key additions. Of course, you can pause the video and look at each one right now if you want, or download the spreadsheet. But some of the most interesting additions, in my opinion, are going to be BMY, Bristol Myers Squibb, and we'll touch on them more later in the video. But we also have Dick's Sporting Goods. If we jump over to my dividend breakdown sheet, come up here and plug in DKS and hit enter, we can see this is a company that has seen very rapid dividend growth over the past decade, with a 10-year dividend CAGR coming in at 24.29% and a 5-year at nearly 32%. So that is rapid dividend growth from a company with decent starting dividend yield sitting at about 2% and a solid history of dividend growth. And they also paid out a massive special dividend in 2021. And if we look at all of this, we can see that those dividends paid out are also backed by massive free cash flow growth from the company over the past 4 or 5 years. Now we can also see the Hershey company was added, and this is a company with a decent starting dividend yield sitting at about 2.73%, and they've also grown their dividend over the past 5 years 62.24%. And then if we come down a little bit further, we can also see a company they added was Nexstar Media Group. This company has a nice starting dividend yield at 4.11%, so a company closer to the higher yield side, but they've also increased their dividend payouts over the past 5 years at a rate of 268%. So that is massive dividend growth for that company. Let's go ahead and jump over and look at some of the key removals, and this is where things start to get interesting. Now, if we jump back over to Seeking Alpha and click on holdings, we can see what the old holdings for the company was. And the top holding for SCHD before this reconstitution was Broadcom, and it made up around 4.79% of the entire fund. But this was actually a holding that was recently removed in their reconstitution. Broadcom is a company that has seen phenomenal returns over the past decade, and over the past year, it's up around 90.52%. Now, Broadcom is a company I own own in my personal portfolio, and when I originally bought in, the yield was above 3%. But the reason the yield is so much lower now is because the company has seen such a run up in the price. And we have to remember that the additions and removals to SCHD are not picked by the fund's managers, but by the algorithm that they use. And we have to remember that the algorithm only considers securities in the top 50% by dividend yield after filtering for 10 consecutive years of dividend payments. And because of that filter, it removed Broadcom from the fund. And so in my opinion, this is a good reminder. While SCHD is a major holding in my portfolio, this is one of the reasons I don't invest all of my money into the fund. I also want to invest in companies that I believe have great price appreciation potential and dividend growth appreciation, and AVGO is definitely one of those companies. In fact, I'm already up over 140% on this position. If we keep moving forward and looking at some of the removals from this company, one that I actually really like is 3M. Now, some people may disagree because this company has a great dividend history and a solid starting dividend yield sitting at about 5.76%. But if we jump over to my dividend breakdown tab, come up here and plug in 3M and hit enter, one of the things we'll notice is that the company's free cash flow growth rates have really slowed over the past decade, and especially over the past 5 years, with the free cash flow CAGR being below 1%, and also that free cash flow payout ratio is starting to climb higher and higher, which is definitely not something I like to see. So yes, a great history of increasing dividends and a solid starting dividend yield, but I do have concerns about the sustainability and the growth of the dividend moving forward, so I actually like that removal from the fund. Now, if we come down a little bit lower, we can also see Williams-Sonoma, stock ticker WSM, was removed from the fund, but again, it's the same case as stock ticker AVGO. This company has seen a large run up in its share price over the past year, and it now has a starting dividend yield sitting at 1.55%, making it where it's unlikely the fund can keep this stock in its holdings. So now let's look at some quick notes on all the changes that were made with SCHD's Reconstitution. I'll go ahead and zoom in. Again, we've already touched on this, but the amount bought was 23 and the amount sold out of was 23. So basically it's a wash as far as additions and sales. And if we look at the additions by sector, this is interesting. We can see they added 10 companies in the financial services sector, but they sold out of 8. So we're going to see more companies in financial services. We can also see they added 4 companies in consumer cyclical while selling out of around 3. Something else worth noting here is we can also see they added 2 companies in industrials, but they sold out of 5 companies in the industrial sector. Now, if we start to look at some of the dividend metric changes, this is where things start to get interesting. We can see the average yield of the new additions is sitting at about 3.35%, and the average yield of removals sitting at about 3.24%. Now, it is important to note these are not weighted averages, but the additions that we've seen have a slightly higher starting dividend yield on average. Now, if we come down here, we can look at the payout ratio. The median 2023 payout ratio of the additions was sitting at 39.85%, while the median 2023 payout ratio of the removals sitting at 54.62%. So we're seeing a pretty drastic decrease in the average payout ratio with the new additions compared to the removals. Definitely something I like to see. If we look at the median 5-year dividend growth per share of the additions, they've grown at a rate of around 86.29% over the past 5 years, but if we look at the removals, it's sitting at about 59.24%. So really, the dividend metrics look pretty good for the additions. They have a slightly higher starting yield on average, a much healthier payout ratio, and better dividend growth over the past 5 years. And if we scroll down just a little bit further, we can see the expected SCHD beta is sitting at 0.91. So the volatility of the market is a beta of 1, and so with a beta of 0.91, this company should see slightly lower volatility over the next year. We can also see the total expected weight change for this fund is sitting at about 11.25%. And with the changes in the payout ratio, if we come over here, we can see the old weighted average payout ratio for this fund was sitting at about 66.15%, but the new weighted expected payout ratio sitting at about 54.43%. So again, that is a good sign for this fund. And if we look at the old top 15 allocation, we can see the 2 removals are going to be Broadcom AVGO. We already touched on that one, but we also have Merck & Co. stock ticker MRK, which was previously an allocation of around 4.67%. So again, that's another pretty big removal. And if we look at the expected top 15 new allocation, we can see all the funds that remain, but we also had a major addition with BMY, Bristol Myers Squibb. If we jump over to my dividend breakdown tab, let's go ahead and plug in the stock ticker and hit enter. And the first thing we'll notice is a very nice starting dividend yield sitting at 4.64%. So that's a pretty high starting dividend yield, but they've also seen good dividend growth over the past 10 years and the past 5 years. But here's what I really love about this company. The free cash flow growth over the past 10 and 5 years have been phenomenal. 10-year free cash flow CAGR of around 15.5%, and a 5-year at 12.67%. So when we look at the blue bars here, we can see free cash flow has absolutely been exploding, which leads to a low free cash flow payout ratio at around 37.5%, something else I love to see. Now, one of the things it looks like on a surface level, when we look at the yearly dividend payouts, it looks like the dividend payouts are choppy. But if we look at the red bars here, the dividends paid out, we can see it's slowly been growing over time. So what's the case with these yearly dividend payouts? Well, if we dig into it a little bit more, let's go over to Seeking Alpha, plug in BMY and hit enter here. If we go over to the dividend history tab, we can see on a quarterly basis, these dividend payments have been increasing every single quarter. So what's the reason behind these choppy yearly dividend payouts? Well, if we dig into it just a little bit deeper, we can see, for example, here in 2023, this company paid out 5 different dividend payments. And in 2021, they paid out 3 different dividend payments. So really it just comes down to the fact of when they pay out those dividends. So it really just comes down to when those dividend payments are made. So overall, nothing to worry about there. This company does grow their dividend payments on a quarterly basis. So there you go. There is a breakdown of SCHD's 2024 Reconstitution. If you want to learn more about SCHD and how the fund operates, then I would highly suggest that you read the fund's prospectus. Anytime you consider investing into a new fund that you don't know much about, reading the prospectus can give you a lot of insight into the fund. And again, if you'd like to get access to this spreadsheet for free, then you can sign up for my newsletter at the link in the description. Keep in mind, much of the data pulled into these spreadsheets is made possible by using the ticker data function and the ticker data add-on in Google Sheets, which you can get at my link in the description as well. But with all that being said, thank you guys so much for watching. Go ahead and let me know what your thoughts are on the SCHD Reconstitution in the comments down below, and please don't forget to like and subscribe to the channel.